Hey everybody, in today's video we're going to be covering how to literally trade any ICT entry model properly. Okay, because what a lot of you guys are doing is that you are using the entry model as a scapegoat. When your trading is not working out well and you think something's wrong, you automatically just go to the entry model and then you're just going to strategy hop and strategy hop and strategy hop. When in reality, that is not even the issue. You don't even know what your problem in trading is, right? If you're using the unicorn model and it's not working out, switching to an IFEG entry is not going to work, and that is because it is an entry model. The entry model is a very small piece of an overarching system you need in place, okay? And unfortunately, a lot of the trading educators you've seen, they really only seem to focus on how to trade a unicorn model, how to trade an IFEG, how to trade the PO3. They don't show any of the things that you need preceding these entry models to have the highest probability system in place that will grant you really high consistency in the long run, okay? So it's not your fault you don't necessarily understand that it's just an entry model, but I'm going to show you how to change this one thing, or a couple things is what I'll introduce you to change your trading. It's literally going to be like a light bulb moment for a lot of you. Because again, like I said, once you understand all of the preceding events before your entry model, any of these entry models can work. It is not the entry model that is making you lose. It's not, I promise. And I'm going to be going over the solutions for that right now. Okay. Starting at the very beginning, we're not even going to talk about the entry model. And also, sorry, I'm not going to be going super in depth into how to spot these models. I'm kind of anticipating that some of you are already, struggling traders, just trading these very common models or just struggling in general. So I'm not going to explain the strict criteria on how to find a unicorn entry, how to find an IFEG entry. I'm kind of going to assume that you guys are already trading with these models and not doing too well. So keep that in mind. But before everything, we have to take it back to the manipulation. The manipulation is what is creating, the strong move before your distribution move, right? You need to properly identify these manipulations before we can even think about an entry model. Because what a lot of you are doing, or a lot of traders, I'm assuming, are doing is that we are only focused on the low time frame liquidity, and we're completely ignoring the actual narrative of price on the high time frame, and we're getting super low probability manipulations, and we're kind of just pattern trading the sweep of any high or low we see on the 1 minute or the 5 minute time frame. And in reality, that's not going to cut it to get a super high probability manipulation before you trade your entry model, right? So as I mentioned, there are things that have to happen before this entry model to make it work out. So we're going to dive into that right now. Okay. We need to identify high probability manipulation. We aren't just going to be taking any internal 1 minute sweep, any internal 5 minute sweep, break of structure. We're not going to be pattern trading like that. Okay. Why does this 1 minute sweep of liquidity not work? It looks fine to me. We have a really nice rejection wick. Sure, debatably we don't have a good distribution move after this sweep of liquidity. Some of you would probably still take this change in state of delivery, break of structure, whatever. Okay, I'm just going to assume that because we're kind of just pattern trading the 1 minute. Why does this key level in SMT work in comparison to this 1 minute sweep? So this doesn't work and this works. Why is that? We have factored in high time frame. Okay, the high time frame is going to trump all, and when you implement high time frame and high time frame, or you use the high time frame for your manipulations, it's going to change your trading. Okay, so what we see happen is that the sweep you saw in the low time frame was a sweep of a previous hour high paired with an SMT. That is much better confluence as compared to a random 1 minute pattern traded sweep of liquidity. You guys can't just look at the 1 minute chart and take every sweep you see. Like, let's look back here. How the heck can you guys expect to differentiate any of these highs and lows between a break of structure versus a sweep in liquidity? What's just a retracement before the big move? Like, this looks like a good liquidity sweep, but in the end it was just a retracement to go higher to actually sweep out the liquidity before the distribution move. You cannot determine that unless you're factoring in the high time frame narrative. Okay, the high time frame is going to tell you which direction price is going to move in and when a big distribution is going to happen. That's how you're going to catch the highest probability manipulations. Okay, so I go over more in depth how to identify these key level and SMTs in my high time frame bias video. So after that, or after you watch this video, I highly recommend you go check out that video. But I'm going to run through it really quickly. I identify key levels as high time frame highs or lows on your hourly, 4 hourly, or daily chart, or high time frame fair value gaps with the same time frames paired with an SMT. That's literally all it takes to improve the quality of your manipulations. That is literally the simple thing you're going to implement before you're taking your entry models. Okay, so you're not just going to be taking some phony internal liquidity sweeps preceding this entry model, because that is not a manipulative move before your entry model. Okay, you're not just going to be blindly trading IFEGs or unicorn models anymore. You're going to be following it in the direction, either bullish or bearish, and I said that inversely, of your manipulation. Right? We're not just blindly pattern trading. That's what I'm trying to get through you guys' head, is that before the entry model, there are things that have to happen, and what I want you guys to change in your trading is implementing the high time frame, aligning that with your low time frame liquidity, which will then grant you your entry model. And the reason the reason this video is titled "Trade Any of Your Entry Models" is because, as you can see, once this manipulation occurs, you will see the setups for these entries. You can take your inversion fair value gap now that you have your directional bias. You can take your 2022 model depending on the bias. You can find your unicorn. You'll be able to find all of these entry models at a higher probability once you understand this first step. Okay. And as you can see in this example here, again, we've filtered out our improbable internal noise. We found a high time frame key level, which was just the sweep of the previous hourly low here, paired with an SMT, so we can anticipate super high probability manipulation before our big move lower, right? And as you can see, that big move lower plays out. And what happens in that big move lower, following our first step of our manipulation, you get a shit ton of these entry models that show up, right? You have your change in state of delivery. This is how I enter, and this is the trade that I took, was on the 5-minute change in state of delivery here, after the confirmation was in place, right? Or I think I actually took it on the retrace here. I could be wrong, but that was my entry for this when I took it live. But look what happens following our confirmations, our change in state, and our manipulation. We see a sweep of liquidity, and our inversion fair value gap. We have an inversion entry model. We have a change in state of delivery. Then we get our break in structure. We retrace higher. We get our unicorn model, our 2022 model. Look at how all of these entry models are now in play because we've identified this manipulation. Okay? So we're no longer just firing off random fair value gaps. We've aligned the bias from our high probability manipulation with these entry models. Okay? And the other thing you're going to notice is you're going to be like, well, dude, in the end, we did end up just getting these entry models off of this internal liquidity sweep here. Why did we have to do all of this before just finding this 1 minute? Because it's about probability. It is about probability. Okay? It's no coincidence that this 1 minute aligned with your high time frame. Right? All we did was follow the same bias that this actual high probability manipulation occurred, and then we found it in the same direction internally. In this example here, and all of the examples you guys are probably losing on, we don't have the context of our directional bias and where we actually want to go. And then as you can see, we get all of these entry models. Once you're understanding the context of the trading and the distribution move that is about to occur, any of these entry models are on the table. Okay? And this is important because you guys, again, I think this video is going to be like a light bulb moment, because it's supposed to identify that you're changing something that's not the issue in your trading. The issue is understanding this right here. Okay, you're trying to figure out, you think the entry model's not working because you enter and then it goes to your stop and you think it's a shit entry. No, you're missing a previous step you probably didn't even know about, you probably haven't even been thinking about. You've just been thinking these low time frame liquidity sweeps are plenty for your entry model. Okay, so by implementing this step, it's going to open pretty much everything up. Now you're not going to need to jump from entry model to entry model or strategy to strategy. You've just implemented a step before this entry model to achieve these higher probability entries, right? So I really hope this video changes the way you're viewing these entry models as a piece of a system and not just the system in itself. These need the unicorn, the IFEGs, they all need context before you trade them. Okay, and that context is what I just showed you right here. And as I mentioned before, the high time frame bias video that I put out before this goes much more in depth into how I identify key levels in SMTs, and it shows examples. But there's a lot of things that precede the entry model that you guys probably haven't even been thinking about, right? So I really hope this video was beneficial to you guys. I hope it changes the way you're looking at the charts, and it should really stop you guys from strategy hopping. Because again, the entry model is not a strategy; it's a piece of your strategy. So you just have to implement this other step that maybe you didn't even know existed. Okay, so that's going to wrap it up for this video. Please leave your comments and feedback. I know a lot of you have been saying the mic's been quiet, booted it up again. I thought it was fine last time. Now we're actually touching the red in OBS, so it is maybe too loud. I don't even know. But yeah, that's going to do it for me. Please leave feedback. I said that already, but just comment and subscribe if you want to see more of this content, because basically what I'm doing is I'm building up like a boot camp for you guys for all the pieces you're going to need to trade on your own. So I will see you guys for my next video.